Hope you guys have been well. Thanks for joining. Let's see if you can learn some bits of this thing. Sorry, I couldn't link this one to the Facebook. I'm having some bit of challenges linking this Facebook to this Zoom to the Facebook one. So we'll just do a quick review and a quick analysis on how to maneuver the charts around. In case of anything, just type on the chat box. I'll just try to review your concerns as well. So basically, before you do any analysis, when it comes to trading, identify where this trend is coming from, identify where this trend is going to, and then from there it will give you a clear picture of what you are working with, of how you are supposed to go about this thing when it comes to analysis. So number one, identify the trend. Where is this trend coming from? Where is this trend going to? And then afterwards, you can now measure where this thing is moving to. Like if you can just see how a river normally flows. A river normally flows from the upside going to the downside, like from the mountain side going all the way to the lake side, and just to the some outlets somewhere there. And that's the same thing that happens when it comes to analysis, when it comes to trading. Identify the movement of how where this move is coming from and where this move is going to. And then afterwards, you can tell how to maneuver your trading. So this one in front of you is just like a blueprint of what to expect. It's a blueprint, or just like a roadmap of what to expect when it comes to doing analysis on the charts. So don't always expect the market to behave according to your structures or according to how you are doing your analysis. Because remember, any line that you draw on the charts, that is only our limits when it comes to doing analysis. But as long as you understand the dynamics of how to maneuver trading and how to go through about it, it will be very easy for you to understand how to go about doing any kind of analysis. So the first thing you should do, where's this trend coming from? Is it going up? Is the trend coming down? Or is this trend going flat ways? Then from there you can now jump in and now start this thing. So like this one, you're seeing this move is coming from the downside going to the uptrend, because these lines, I've drawn two lines here. They are the upper line and the lower line. It's going towards the upside. So from there, it will now tell you this one now is an uptrend. This one now is an uptrend, moving towards the upper side. So from there, it will be easy for you to now start doing analysis from there. Now, this move came from this upper line, came downwards to this lower line here, then now went back all the way up. So after this level here, this price could come down all the this price could come down past this line here and now go up. So this line can even make a fake breakout. So how do you know that this structure is coming to an end, or how a breakout is supposed to be traded? Because you can be drawing a line, the lines can be very perfect, but now the market won't obey that line exactly as it's supposed to obey. And then what happens? That market just goes against the line. So you must know if it's a clear breakout or it's a fake breakout before you actually begin doing your analysis. Number two, this move came from up, this line came down. So you're seeing this price is just between this channel here, this upper line and this lower line here, which tells you that it's just playing between two lines. The same way a river flows, forming meanders along the path as it's going downstream. The same thing when it comes to analysis. The river must follow a particular path along the way. So this chart will form structures, and like for us, we normally use wave analysis. Wave analysis will give us which direction this move is coming from, which area it's supposed to be going. Afterwards, we now jump in the trade. So you must know which move you are trading first of all before you actually join the particular waveform. So this one, after this line, the move is supposed to be going to the upside. So once this move came downside to this line, it normally forms some kind of an ending structures. So ending structures they're also called reversal structures. So that's how we normally do this thing. It's called also reversal structures as well. So it can be an inverted head and shoulder, it can be ending diagonals, it can be candlestick patterns from there, then you can now just jump in as well. So that means that move is coming to an end. Now the move now is going upwards, and upwards you can see this structure here. It's forming some sort of a it's called a flag, as we normally call them flags. So this structure here, this structure you're seeing here, if I can zoom in this structure here, let me remove the watermark like that. So this structure here, you're seeing this move came from this line, then went all the way up here. There was some kind of a resistance here, then came down. So when it comes to us who are trading wave analysis, we'll just identify this one as the wave one, then this correction here will be now the second wave structure. Then afterwards, the move will now try to pierce this level, which was a resistant part of it, this line. It will break out of it, because now there will be a pressure from downside coming to the upside as well. So this move will come all the way to here, like the third wave sequence. Afterwards, it will form some kind of a where price is trying to consolidate, or where price is trying to make some retracement patterns. Then it now resumes to the upside as well. So this structure here will form a flag. So this one is normally called a bullish flag. So a bullish flag occurs on an uptrend or on a move going to the upside. So it will be just in this form structure. So a flag can form two structures, can form a rectangular structure like you are seeing here. I've done like W, X, Y, X, Z. So this one normally it's called a complex structure. It can form another shape, which is a triangle as well, which can be ABC, or it can be ABC, DE, then now proceeds to the upside. So you must always know where are you taking your entries. If you're taking an entry, after a flag, your stop loss should be somewhere below the flag as well. If you're taking, like an example, you're taking an entry after based on a flag, your stop loss should be somewhere below that flag as well. The stop loss should be somewhere below the flag, or at a very strategic point whereby it won't be very easy for the market to take you out, and based also on your risk management when it comes to trading. So you wait for the third or the fourth touch after this strong pole. So this one is normally called a pole. Then we have this flag region here. Then we have stop loss should be somewhere below it. Then you now move to the upside as well. So you can be taking a trade here at maybe at this level X, then for the market to just come down as well. So you must know exactly if this breakout from this level was a genuine breakout or it was a fake breakout. So you must know how to limit your risk before you actually enter the trade as well. But with practice, you'll just know. So it takes so much practice before you actually know how to execute trades. We have two phases of trading, and being aggressive with it or being conservative with it. Aggressive means you take the trade, immediately it touches that line. Conservative, you wait for a clear breakout, then you can now continue with it. So you must know which kind of a trader you are. So with the time, you can adjust from being a conservative trader, and now you try to become an aggressive trader with time. So it just takes time, so much practice to identify all these structures. And after this breakout here, there can be a retest on this line or not. So sometimes we'll wait for this retest here on this line, but this move comes all the way inside this structure again. So remember something, the market normally runs on liquidity. So if they want liquidity to be inside this structure, that's where that market will move. If it wants the market to find liquidity on this line, that's where the market will end. If it wants lower, that's where that market will go. So that's why account normally get blown, because the liquidity level where you've entered the price is not the liquidity level. So what happens? Accounts get blown. Maybe someone says it's a sure trade. You put all your eggs there, then what happens? That basket collapses. So you must know which thing you're actually trying to do before you go in the particular trade. So know how to identify fake breakouts, because they'll happen several times. So each line you draw on your chart is not the market's limits. It's only your limit. So you must understand which area you are actually trying to trade from before executing a trade. Afterwards, after this breakout is complete, the market now will go upside. But you'll be waiting for a retest here, then the market does not give you a retest there. So it just goes up. So I try to identify these things called flags, enter trade, then now move with it to the upside. After this structure here, this level, this structure here, now as you can see, price came from this lower trend line here to now the upper trend line. So you can see price is almost coming to an end of this structure. So what next after here? Price is supposed to be going to the downside as well. So it's supposed now to follow and move to this line again. And the cycle continues. So this side will be the bullish trend, and now this side will be the bearish trend. So anything that happened here will turn to happen on this sequence. But now this one now will be the impulse. Now this side will be the collective structures again. So when for us, when it comes to wave analysis, as we normally just do two things. We normally label our charts in waveform. So for this structure, since you cannot see the waveforms here, as we'll just know from this lower line here will be wave 1, then 2, then 3, then 4, then 5 after that. So we have like 1, 2, 3, 4, 5, and all of these waves have rules. So all of these rules must be followed, and all of these rules have levels where they're supposed to hit, where they're supposed to touch. So that will tell us which wave we are in. So for us, so that's why we normally use wave analysis, and it's very tangible when it comes to doing analysis for ourselves and even for our students who are with us. So we just have to understand that it's not just trading. You must understand the market dynamics before you execute a particular trade on your chart. So you must understand what is this market telling me, and then you react to it. You just react to what this market is trying to tell you after that. So the market will normally play along the lines for liquidity, because liquidity is what runs this market, not traders, not us retail traders, not buyers or sellers. So it's more about liquidity levels, and that's how we have so many few traders and many people who are trying but they're failing. It's because they won't understand market dynamics when it comes to trading. So for us, after this trend that's completed on this line, remember this level here at 5. This move can also come outside the line, like a level for, yes, it's supposed to sell from this line, but it's doing an extension level upside then. So it's taking out early sellers. Then now it will now resume now resume selling to the downside. Okay, someone can have taken a sell at this level, like maybe an aggressive trader. They take the sell at this level. So you must know which level is that. Is that a level for liquidity level? Yes, if it is, take the sell, but also remember to execute a very easy trade for yourself and for your account to sustain in case it moves even upwards, not to blow your account. So you must know which level you want to get out of the trade if you are wrong, if that is not the liquidity level for that particular trade. So you should only have 4 things on your trade: a small loss, a big win, a break even, and never a big loss on your trades. So you must know how to balance your trade when it comes to trading. So after this trend is expecting a move to the downside, like now sellers are now coming in, we now sell, then it forms this kind of a bearish flag again here, like an area called retracement level or a level for consolidation level. Then it moves to the downside. And also, as you can see, when it's coming to this lower line here, it's forming a pattern called a reversal pattern, which is called an inverted head and shoulder. But as you can see, this whole big structure, you can also spot head and shoulder. Here at 0.3 is we're having the left shoulder. Here at 0.5, we are having the head. Here at this point, we are having the right shoulder as well. So for the bigger picture of it, and now when it comes to this structure here, this low area here, we are having an inverted head and shoulder as well. So after this sequence is completed, the same sequence will now complete to the upside. The same sequence that happened on this structure here will happen again on this structure here. So this move can also come below the line again. So remember that your lines are only your limits. It's not the market limits. It's just your limit when it comes to analysis. So you must understand which area are you joining from, or which area will you be taking the trade from before you now continue with the trade as well. So the same sequence will happen again. We're having another wave 1 here, 2, 3, 4, 5 again. So all these waves have levels that we're supposed to trade. So we can't just trade them blindly. We normally have levels where to take a buy, take a sell. And that's more of understanding market dynamics, Fibonacci levels before you execute a trade. So basically, that's what I wanted to cover with you guys. Then from there, we'll be doing more of these videos, posting them for you to see how to help you for those who are trying to learn, because analysis takes time. Let no one cheat. Analysis takes time to understand and to actually be something very viable for you. It takes so much time. Just practice. Don't jump into every strategy. Look what works for you, because these waves for us, price action works for us very well. So, and each of these waves have rules to mitigate their losses or to reduce the losses. So we have rules for each of these waves. If a trade fails, we know where we put our stop loss from there. Then we now proceed with trading. So, like we posted a chart on gold like a day ago on what to expect for gold or for the next move. And if you followed gold, you can see that it did that move whereby we gave a slight sell for it. So we normally post charts here on our trading view account. And this is what we had on gold. What we had on gold on 27. So we are expecting this sell here to drop up to this region here. We're expecting a sell to drop all the way here. Then it starts to go to the upside. So as you can see here, it's doing that. It did that. It did this. It did this. This drop here up to this 1872 level. Then now it moved. So it came down around 270 pips. Then it's now going up around 300 pips. Like as of now. So we are expecting it to more move to the upside. But in case it does not go to the upside, it will just break down below. So we'll react to it on how it's behaving. So basically, that was what I wanted to cover for today. I was supposed to link this video to the Facebook page, but it was having a bit of a challenge. So we'll upload it on the Facebook and the YouTube channel as well for you to actually have a clear picture of how to go about it. But this one, just know this one is just a roadmap. It's a blueprint. Don't expect the market to just behave in your lines. The market is there, it's supposed to go against you. So you don't expect it to do the exact thing as what happens in the books. So with that, in case you have any queries or any other concerns, just send us a message. You can call us. The numbers are on the page or on our website. Then from there, we can be able to assist you guys. So, but just know, analysis takes time. It's not that difficult, but constant practice. Let it be something that you desire doing, and then from there you can see how to maneuver about it. So that if you have any question, just post them on the chat box. I'll see how to answer them for the remaining 2 minutes. Then we can end this session. If it was something beneficial for you, or how it was, but we'll be doing more of these videos for you to understand, and more analysis when it comes to charts and everything. For those who don't know, my name is Maurice. I'm the founder of Infinity Waves, whereby we try to help learners get a clear path when it comes to trading, and to make it easier for other traders to join this thing and actually find a purpose when it comes to trading. So in case of any questions, just post them in the chat box, and then you can see how to go about it. So in case you don't have any question, you can always feel free to ask us any questions. Then from there, we'll see how to assist everyone, because analysis is supposed to be for everyone. But I think what I've covered is something everyone can learn and everyone can comprehend. It's not that difficult. As long as you have a roadmap of where you're supposed to be going, the rest will be easy for you to maneuver and to even continue. Just like I've shown you, something meanders are just let me show you meanders. Take this for example. This one is a meander. It's how a river flows to the downstream. How a river flows to the downstream. The same thing with this one exactly here. This is how a river flows going to the downside. So it's the same thing. A river flows from this uptrend going to upside, going to the downside as well. So just connect your lines. Know which level you're connecting your lines. Where is that river coming from? What that river is going to? Then afterwards, it will be very easy for you to actually execute your trade. So it's just forming the same things as waves, like that, and all the way to the outlet somewhere. So it's just the same thing that we do when it comes to analysis. So don't let it be something very difficult for you to comprehend. So I think with that, it was a pleasure to do this with you. We'll be doing this thing more often, for you to actually for you to comprehend and for you to understand what analysis is all about. So with that, thanks so much for joining. We'll upload the video on the Facebook page. In case you have any questions, just feel free to ask us anytime. We'll be able to assist you from there. So with that, have a good evening. Enjoy whatever you're doing. Happy holiday. Enjoy holidays. Let me see if there's a question. I came in late, wanted to know how mentorship classes run, like from what time. Now, our classes for mentorship, one joins at their own time. It's not like whereby it's like a school term. You just join at your own time, at the time they're comfortable with. It's not a must you join like today or tomorrow. You just join when you're comfortable, because there are people who have already joined us, so they're a bit ahead with you. So just join at your own time. The time you join is when we kick it off. We kick it off when it comes to learning analysis. So I think that's another question. If you have another question, just ask the questions in that box. So if you go to our website, you can find everything there. You can find this section there, whereby the price list is there for analysis and everything. You just come to services, you'll find them there. Everything is just there. For this, the signals as well, the 1 year mentorship and the one that goes for lifetime package. So whichever you're comfortable with to learn analysis is which you actually take from there. So this one that goes for 1 year starts from like today, 29th, and it goes all the way to the next year in the same month. This one that goes for $470 goes for from now until infinity, until you'll be comfortable to trade on your own. Question. Hi Maurice, can you elaborate how to do break-even? Okay, we'll do another video for this, but not today. Break-even is simply moving. Break-even just means something. It just means that you are not taking a loss or a profit. So you are closing your trade at a level where it's just 0.00. So it's not a profit or a loss. So that's what we call break-even. In case you are sure that trade won't go your way, just close the trade immediately. Martingale layer, I think this one, it's something to do with like a robot or something. So Martingale is something like a robot or something. It opens trade consecutively on your account. So you must know how to go about. But as we never use the bots. So I think thanks so much for that. We'll be having another one very soon from there. So with that, keep learning as much as you can, because trading is more about learning over and over until you grasp whatever you're supposed to understand from there. So with that, thanks for joining, and we hope to see you soon for the next video.